across. I got you, buddy. You're gonna hold my weight, all of it. Okay, come on. You can hold on to my full weight. I can do it. I don't want to die. Okay, 1, 2, 3.
Hi guys, welcome back to the channel. My name is Dave. In my last video I talked about selling at the money puts and calls against SPY and QQQ, looking at about 4 weeks till expiration and what you could generate under current market conditions. And with SPY it was around 14% and QQQ around 18%, if I recall correctly. So not glamorous. Now you can juice that up a lot if you go to individual stocks, but you're adding a lot of risk. These are leveraged products after all. So I've seen a lot of videos recently about, hey, you can retire with a small account and do some option trades and make ends meet. And I think that's very bad advice. I think of options as a portion of what I do. I've got my long-term investments. I've got other things going on as well. And I trade some options on the side and share that information here on YouTube. So I would never tell anyone to try to retire with a small account and just do options. I think that's extremely risky. So I want to talk about that today and also just talk about the risks of options. If that is what you're looking for, please stick around. Whoop.
Greed, for lack of a better word, is good. Greed is right. Greed works.
That's right, Gordon. Greed is good, and greed might be entering the stock market just a little bit. I'm looking at a chart right now of the S&P 500 going back to the beginning of 2023, so the last 18 months, and it's up over 42%. The Qs are up over 81%, so outstanding performance. Then you combine that with the fact that we might see a decline in interest rates going into 2025, and people have to make a choice. What do? I'm sitting here in cash. I got to put it somewhere. Some of that's going to flow into longer duration bonds, I'm sure, and some of that's going to flow into the stock market. And that could continue to drive our stock market higher. So we'll see how this all plays out. But I think a lot of people are out there patting themselves on the back, whether they're invested in stocks or they're trading options. There have been a lot of positives, and a lot of people want to shout about it. So let's start by understanding that options are leveraged instruments, meaning what can feel like an innocuous trade at first or be presented that way when you're watching a video, let's say I'm selling a put to collect a premium, can turn into a disaster pretty quickly. So let's use stock XYZ that's trading at $100 a share, and you want to sell the 110 call, and that's a 20 delta call option. Well, that 20 delta call option is giving control of 100 shares for basically the price tag of 20 shares. And that's the leverage that we're talking about. So as this option moves against you, if you're the seller, the buyer of that 20 delta call, if it goes from 100 to 101 to 102, starts adding up really quickly, right? Because we have gamma adding to delta. Delta is not a static number. It's dynamic in nature. It's moving up in value. So that can quickly change, right? When it gets up to that 110, it's like they own 50 shares. And when it goes well past that, it's going to feel like eventually, if it gets high enough, that they have control of all 100 shares when you only gave them control of 20 in the first place. So that's the leverage that's involved with options. So when the leverage shifts like that, can you handle the change from 20 to 100? Can you hold the weight?
I'm gonna swing across. I got you, buddy. You're gonna hold my weight, all of it. Okay, come on. You can hold on to my full weight. I can do it. I don't want to die. Okay, 1, 2, 3.
Now, one of my favorite strategies is about as simple as it gets when it comes to options, and that is selling a put. Not even doing the wheel strategy, just selling a put. And if it does not work out in my favor, I'll close it out and I'll roll it down to a lower strike and I'll take my loss. But I tend to be pretty conservative, so I sell, let's say, the 20 delta put. In that case, you can also think about delta as the probability for the buyer that it's going to expire somewhere in the money. So when I sell this delta of 20, I can think of it as 4 out of 5 times I'm going to make money on this trade, but one of those times I'm going to lose. The real question is, how bad do I lose? So it's more about managing that loss than those other 4 times when it expires out of the money, right? So that's where I think it's becomes a little nuanced and depends on your trading strategy and what you're doing. So you can make money with options. I don't want to tell people that they can't do it because I've been doing it for years and it's helped me. But to do it with a small account and say you're going to be really consistent, I don't think that's that's bad advice. One thing you can do with option trades is define your risk. So in my case of my sold put, you could go out, you could buy a long put further out of the money and define your risk, turn it into a credit spread. But even with a credit spread, you still need more wins than losses. It might be a ratio of 4 wins before you have 1 loss. Otherwise, you're right back to where you started, and you need a paycheck that month because you just have a small account and you decided to retire early. That could be a disaster. I mean, even the very best, like this, I'll put it up here right now. This is Pershing Square. This is Bill Ackman's fund in 2022, which was rough on everybody. He lost 8.8%. Can you afford to do that at a very small account? It would get pretty rough pretty quick, and I would never want to see anybody struggle like that. The point here is that with options, you are still a market participant, even with defined risk trades. So when the market reacts negatively to our short-term option bet, we're going to be punished just like if we own the underlying asset, and often due to the leverage even more compared to owning the stock or ETF directly. And this is also true if you decide to go the opposite way and bet against the market. It's still a short-term guess based off of our assumptions in a very efficient market that is based upon probabilities. And just to build on this topic a little bit, that bad things do happen in the stock market, and to good people like you and I, here are some key stock market crash stats. So we first go back to 1987, October 19th, and the S&P fell 20.5%. So I'd hate to be uncovered that day with just some sold puts. It would have been a disaster, right? But it does occur. And if you think, well, I'll just define my risk, let's go to the 6 largest single-day point declines for the Dow all occurred in the first 6 months of 2020 as investors grapple with the impact of So yeah, bad things happen, and they can happen in clusters, and that can be very detrimental to our defined credit spreads. And I don't think you're always going to pick right. And it is a probability play. So anyway, the largest single day point decline for the S&P 500 also occurred on March 16th, 2020, falling 324 points, or about 12%. So a few different dates there to avoid. Maybe you were out and you didn't put on your trade, so you're okay now. And finally, one more just for fun, because when I graduated in the mid-90s, I started investing right away, and I started buying things like America Online. I bought some company that made these things called compact discs. I thought that was the future for sure. They were just printing money, but it all fell apart. So the dot-com bubble was quite interesting to live through. My wife worked for a company, a couple of hot shots that were driving Ferraris. She got to go to New York once. It was very exciting. And it was a startup that failed miserably. But lots of great stories. So right here, on March 10th, 2000, the NASDAQ hit an all-time high of 5,048. By the way, we're almost to 20,000 now, so that's just proof about long-term investing. But a month later, it had lost 34.2% of its value. By October 9th, 2002, it had lost 78% of its value. So how do you like your Qs now? So anyway, it wouldn't reach its previous all-time high again until April 2015. Yes, that's true. That's 15 years there between the start and the finish there. That's a long period of time that I remember quite fondly. Let's go down a little bit further. Let's do one more here. However, and by the way, this is an NFT website, so that makes it even better, right? Classic. Anyway, however, not all is lost in the mess of this bubble. Companies like Amazon IPO'd during this time period and was one of the largest companies in the world. It IPO'd at $18 per share, hit 107 at its peak, and then dropped all the way back down to under $7 per share. Even Amazon lost money, but reported a profit in 2003 of $35.3 million. One share of Amazon stock is now worth $2,852. So yeah, QQQ, SPY, they've been doing great, but you can make so much more money trading options on individual stocks. But you can be you can do a lot of damage really quickly too. So with that volatility comes risk. So again, just pointing to the fact that I think this is unreasonable when a lot of people talk about this. And my plan personally is to be as diversified as possible, with options being something that I'm going to do. But I also want long-term positions. I want bonds, and I want a lot of other stuff too, because I want to build a house out of bricks and not out of straw. So I do enjoy trading options. I've been doing it for a long time, and it'll always be a part of what I do. It's a lot of fun, and I do generate a little extra income this way. But I think a lot of think tanks out there, maybe Warren Buffett, would have a room full of actuaries just kicking everybody's butt if options were that simple and you could get outsized returns. Don't you? So I don't think a guy there that does a little technical analysis and says, I checked my Bollinger Band, it's time to go, I'm going to get outsized returns. I don't think that's a thing, really. So there's a lot of market risk that comes along with that. So for me, it's always going to be the side hustle along with some long-term holdings and other things that I'm doing. The rest of the stuff, I think if you're doing it with a small account and you're expecting only good things, you better be really careful. There's a lot of market risk that comes along with trading options. Anyway, that is my 2 cents. If you like this type of thing, please like and subscribe, and go watch this video next. It's about trading SPY options. I think it's kind of practical for a lot of people. Have a great night. Take care. We'll see you soon.